Oil set for its second straight week of losses against the backdrop of an escalating U.S.-China trade war. For more on how trade policy will affect energy prices going forward, I'm going to bring in Patrick De Haan, GasBuddy, head of petroleum analysis. Great to have you here with us. So just help us break down your own read-through on what tariffs and the trade war have ultimately meant for some of the ramifications within the oil and energy markets.
Well, we've all seen the stock markets reacting to tariffs, and I think where oil comes into play is oil is broadly tied to the economy, whether it's growth or whether it's not. I think demand is the major concern moving forward. That tariffs could certainly slow down the U.S. and, broadly speaking, the global economy, and that's sent oil down significantly. The other big part of this conversation, aside from tariffs, is probably one that some Americans may not have heard. OPEC has increased oil production, or it's restoring oil production that it had cut back in July of 2023 when oil prices were around this level, actually a little bit higher. And then for the month of May, OPEC accelerated the restoration of oil production cuts, or I should say the restoration of oil production. And so we're going to get more oil in the market at a time that tariffs are taking a big bite out of the potential for global growth. And so, as you mentioned, oil prices tanking to their lowest level since really the pandemic. And that, in turn, is going to make Americans' gas prices likely to go down here over the next couple of weeks.
And Patrick, usually when we're talking about lower gas prices for consumers, that sounds like good news. Is there a potential for this to tip into bad news, where gas prices are so low it's indicative of a broader economic slowdown?
Yeah, this is a little bit different than COVID. Obviously, COVID and things like the Great Recession did cause a tremendous downturn in the price of oil and thus gasoline. I don't think the concern is yet as grave as it was during the recession or COVID, but still, the price of oil and the aggressive sell-off, we were at $80 a barrel in mid-January, and now we're struggling to hold $60 a barrel today. That is telling us that there's a lot of distress or concern about where the economy is heading. So while a lot of Americans love to cheerlead low gas prices, and potentially no one more than I do like to see low gas prices, it does come with alarm bells that are going off about the economy. So it's certainly something to keep in mind.
You know, as we think about what President Trump has talked about in wanting oil companies and some of the energy companies who are drilling to drill, baby, drill, it also comes in an earnings season where we're going to hear from some of these CEOs who say, okay, well, that's not exactly sustainable, or maybe they might talk about what it is, what sustainability there is or not for their continued efforts in drilling to bring down prices. What are you anticipating to hear?
Yeah, absolutely. It's going to be a relatively somber earnings season where oil companies, at least upstream oil companies, not diversified oil companies, are probably going to be very worried about the underlying cost of a barrel of crude oil. For areas of the U.S., the break even could be between $50 to $60 a barrel. And now with us testing some of that, some drilling in some areas of the country are probably going to be less affordable. Now, the Permian, you probably can still pull oil out of the ground profitably at $60 a barrel. But there are certainly other areas, the Bakken, where oil bringing it to the surface is more expensive. So, again, oil executives are probably going to sound off a little bit about the fall in the price of oil. And that is something that's probably going to fly in the face of that drill, baby, drill mantra. And that's probably not going to go away, especially in light of OPEC raising oil production. I think the biggest question here is what is going on with OPEC's strategy? How long are they going to stick to the strategy of restoring oil production if the global economy does slow down?
How does the stagflationary environment impact the price of oil? I know, for example, in the latest CPI print, gas prices, while down from a year ago, were up for the month of March. Talk me through how that stagflation growth coming into question, but inflation continuing to reign, could impact things going forward.
Well, I think energy is one of the biggest spots that we've seen disinflation. That's really pulling a lot down in the CPI. Now, of course, it's more the active area. Food and energy prices tend to be a little bit more significant movers. But to your point, yeah, we have oil prices that have now completely eroded compared to last year. Gasoline prices 45 cents lower. Americans saving over $100 million now every day in terms of what they're spending at the pump. Overall, though, as you mentioned, if we do see an economic slowdown, gas prices being disinflationary is still likely to be the secondary role here behind the economy. So, all in all, it's good news for Americans that gas prices are coming down, but against the gravity of what could be economic weakness, it's not the greatest outcome.
Yeah, Patrick, we're certainly going to continue to track this. We know you will as well. Good to see you this morning.
You as well. Thanks.